Well, as promised, let's move on to the management of Varroc Engineering. The company reported a rather good showing in the first quarter. The stock is up close to around 15% odd. Margins as well have improved. We have with us Mr. Mahendra Kumar, who is the global CFO of the company. Hi, Mr. Kumar. Good morning, and thanks so much for speaking to us here on CNBC-TV18. Well, I chatted with the promoter of the company in the last quarter, and what he clearly told me is that the worst is behind. And it appears, at least going by your numbers, things are on a recovery. So let's focus on a couple of aspects then. For the year itself, going by what you have on hand, you're running, I think, 2 or 3 shifts as well, which is optimal levels. Can you end this year with a revenue of close to around 8,000 crores? Point number one. And margins have improved. Do they hold into double digits from the coming quarters?
Yeah, Nigel, so don't take it as a guidance, but yeah, that's our ambition to get to 8,000 crores at a consolidated level, including our overseas entities also. And of course, coming to the margins, yes, our effort is to actually retain or even improve the margins further from the current levels.
Okay.
And
they were at
1 to 2 years.
They were at 9.5%, Mr. Kumar. So if you're going to improve it, you have operating leverages play out, input costs are going down. So double digit from this quarter itself, quarter 2?
Well, I don't want to give that kind of a guidance. But yeah, let's say for rest of the year, that's what we're aiming for. But more than the EBITDA margins, what we are now focusing is on PBT margins. So starting from this year, maybe by sometime mid next year, our intent is to take the PBT margins to higher single digit levels or more than 5%, certainly.
All right, PBT margins over 5%, you're looking at nearly $1 billion in terms of sales, and also double-digit margins perhaps sustain at these levels if raw material prices continue to be the way they are. Let's talk about the EV space. I mean, sub 5% of your revenues coming in from the EV vertical right now. What proportion of your order book is EVs right now? And going forward, how does this piece pan out? Are there margin differentials between regular and EV clients, so to say?
Yeah, certainly margins will be better. Margins and of course the revenue per vehicle also will be far better in the EV space. And we are expecting some good traction to come in the EV space in the coming years. Like how we indicated earlier in our calls, the overall EV revenue should actually touch about 1,000 crore plus levels by next year. So that's what we're aiming for.
Wow. All right. So you're saying that EV as a percentage of business in the coming year, if it goes to 1,000 crores, means it'll be early teens, maybe 12-13% of your revenue mix?
Yeah, maybe close to around 10% levels.
10% plus 7. So on the operational aspect, we have got a fair bit of details. Now the other portion is debt. And in the last 18 months or so, you all have been making efforts to reduce debt. So give us a couple of numbers. What does the debt number look like by the end of this year? And is there a capex plan that you'll have lined up as well?
Yeah, so again, we are making a lot of efforts to reduce the debt levels. As you could see in Q1, we reduced by about 50 crores. And compared to the divestment time, we reduced by about 72 crores. Of course, this is without taking into consideration the recent inflow which we got from divestment, the final inflow. On top of that, we are looking at various actions. We are trying to contain capex to the extent possible. So that will be one positive factor. There is also a lot to be done in terms of working capital improvements. So all this will be on top of the profitability improvement which we are seeing currently this year compared to last year. So all these actions should actually result in gradual debt reduction in the rest of this year and also next year. Our idea is to bring it down as much as possible in the next 1 to 2 years.
What is the absolute debt, sir?
See, right now, as of Q1 end, the net debt was about 1,228 crores.
And this is not taking into account the money that you got from the divestment, right? Close to around...
Correct.
Okay.
Correct.
So if you're just for that...
we about 8 to 9 million we get towards debt reduction from that. There are certain costs also which we have to meet out of that. But still net 8 to 9 million is what we are aiming to get out of that, and that will help reduce the debt further.
All right, so that's about 80-90 odd crores coming out of that. And you said working capital days, you're looking to improve that. Where do they stand at right now, and how much would they improve by going forward?
I don't want to give exact number there, but the way I see it is there are ample opportunities in every element of working capital. So that's what we're working on. be it inventory or receivables or even payables. So we're trying to streamline everything there, so that should result in some significant improvement for us. But I won't put a number to it right now.
All right, Mr. Kumar, final question before we let you go. You know, Bajaj is moving up the value chain and they've launched that new beauty with Triumph. And now, you know, y'all serve a large part of Bajaj's requirements. So in these bigger vehicles as well, y'all will be supplying components?
Yeah, that's true.
And in that case, would it
so
be a higher per vehicle cost that you'll get? I mean, revenues per vehicle will go up because of the supplying to premium vehicles?
Yes, that should happen. But I mean, I don't want to again commit anything now, but yeah, we are working on those opportunities as well. Not only Bajaj, even outside Bajaj also, we're working on those opportunities.
All right, you don't want to commit, Mr. Kumar, but we did some back calculations. You said that this year you're targeting about 8,000 crore. That's your aspiration. Next year, you cross 1,000 crores in electric vehicles, and that would be 10% of your revenue. So obviously, it is a 10,000 crore company that you're targeting at next year as well. You haven't given us any numbers. We just made the back calculations.
Yeah, we do calculations there, and also on an EV upon EBITDA basis, it seems that's why the street is excited, because if we're going to be doing these revenues of 800 to 1,000 crores of EBITDA, and your debt is coming down as well. Well, valuation-wise, at least, it's in your favor. But we thank you for joining in, giving us some brief numbers. We look forward to having a chat with you in the times to come. Appreciate you joining in, Mr. Kumar. Well, time to slip into a short break. On the other side, we'll focus on markets and stock-specific action. Don't go anywhere.